You ace the exam, rank #1 in the class, and walk home only to get chewed out by your parents? That's exactly how Oracle feels right now. In the latest trading session, ORCL closed at $184.10, down over 8%, with intraday losses shaving off more than 12% at one point. I know a lot of you are looking at this absolutely baffled. Didn't they just post a massive earnings beat? How is it that the more money they print, the harder the stock dumps? If you are the type of investor who loves hunting for these market overreaction plays, make sure to hit that community link in the description. Sometimes, making money in this game isn't about reading the headlines. It's about sniffing out the real macro logic behind them. Let's cut straight to the chase. This earnings report was beautiful. Honestly, it was a total flex. Top-line revenue growth? A solid beat. Bottom-line profit growth? Another beat. Their RPO, the backlog of orders, hit a brand new record high. Pretty much every single key metric you can think of absolutely crushed expectations. More importantly, management reaffirmed their fiscal 2027 revenue guidance of $90 billion and even bumped up their full-year EPS outlook. Now, any rational person looking at this would think, this thing should be ripping to the moon, right? But the market can be an absolute diva sometimes. Wall Street isn't even trading this quarter anymore. They are already pricing in what happens 3 years down the road. Right now, the smart money on the street is sweating over one thing and one thing only. Can this AI hype train actually sustain its momentum? See? To aggressively grab market share in the AI space, Oracle has been burning through insane amounts of cash on data centers and cloud infrastructure. Simply put, they are front-loading massive capex now, betting on huge paydays later. But here's the million-dollar question. What if the future demand for AI isn't as insane as everyone assumes? Can they actually get a return on these massive capital investments? That is what's keeping institutional investors up at night. So this sell-off, it's not because the fundamentals are bad. Quite the opposite. The print was so good that the market is starting to worry if the expectations have outrun the reality. Currently, institutional price targets range from $201 all the way up to $400, with a consensus average of $269. That tells you Wall Street is still fundamentally bullish on Oracle's long-term trajectory. So, moving forward, the real metric to watch isn't how much money Oracle raked in this quarter. It's whether that AI demand can actually deliver. To see how we are playing this correction, click the community link in the description to join us. Let's dive deeper inside on where the premium entry points are opening up.